Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for July 26, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame in the ES. Right now you can see price is basically holding at highs within a very narrow range, which spans about 2150 up to about 2170. This range is developed after the push through 2120 here, and we basically held at highs. And this is in anticipation of the FOMC and Fed funds rate for the upcoming session Wednesday. So we're basically kind of in a holding pattern as we head into the Fed. Once we see that report come and go, we're likely going to see expansion from this range. Any push through 2150 opens up a retest back toward 2120. A retest of this area after first going bid could offer an opportunity for bulls to defend and retrade back toward high. So keep that in mind. As of right now, nothing really to do. It's kind of a wait and see type of thing. But if we look at the intraday time frame, something to keep in mind about the intraday here is that we've formed that larger range from 2150 up to 2170, and right now we're kind of right at the middle of it, 2160. When you're at the middle of a trading range, there's really nothing to do. You have to wait for the edges of the range to be tested. So right now, should price rally into 2170 or anything above 2168 basically, could be an opportunity to fade back to value. If price gets down into 2150, 2152s, that could be an opportunity to fade back to value again. So really, right now, there's nothing here to do. We're sitting right around 5-day VPOC, 1-day VPOC, and we're basically just chopping around. So you really have to wait and be patient for the edges of the range to be tested. Right now, there's really nothing to do at the moment as this thing coils ahead of the FOMC. If we take a look here at crude oil now, crude oil is moving. This one is moving significantly. We talked about the fact that if price fails to hold above 44.40, we could be looking at a drop into 43.03, followed by a move into 42s. And so far, we've reached our 43.03 yesterday. We pushed right into that level until we hit it almost on the nose, and we stopped. And I mentioned the next major key level down is going to be 42 after that, and we're continuing downward so far. One thing that's interesting as well is if you bring up both a weekly or a monthly bear target here on the ADR, the 100% target for the week and for the month is 41s. So we could be looking at more weakness here into 41s by the end of the week, which is also the end of the month, and both of those right here would be average moves over the last 10 weeks and over the last 10 months. Both point to this 41 level being the target that we perhaps reach by the end of the week. So not only could we see 42 by the end of the day, but we could be looking at 41s by the end of the week. The big thing is anytime you form a very tightly coiled range the way we did here, once you start to see expansion, you usually see a continuation until you find the other edge of rejection. One thing on a higher time frame basis to keep in mind is that if you look at the composite profile here, you can see price has just gone offered through value after first taking prices above value offered. So this is VAH up here above this gray line offered, back to value, chop around value, then taking value offered. That means we could be looking at a move to the bottom of value on a composite basis. So on a more position or swing basis here, we could be looking at a move into 37s and this LVN, which is basically 35s before we see any support come into the picture. So a couple of key levels to watch. We have 42 to play to toward today, 41s by the end of the week, and looking out over the next couple of weeks, we could be heading into 37 to 35 before we see any signs of significant support. So something to keep in mind on a swing basis. On an intraday basis here for today, the fact that we're trending lower implies that we should be looking for selling the rips type of plays. So any bounces, for example, right here into the overnight pivot range has been offered. This bounce right here, we'll see if some weakness comes into play there, that could be an opportunity here to defend that rip and look for a selling opportunity into 42s. Again, the idea is that we're likely looking for a push into 42s, perhaps by the end of the day, but more than likely we're going to reach that level by the end of the week. So overall, pullbacks are likely to be defended. This is VWAP right here as well. Any push into this level, still an opportunity to sell for a shot at 42. So right now, until proven otherwise, bears are looking to continue to defend any rally right now for a shot at new lows. Let's take a look at gold. Here's gold. This is a higher time frame of gold. One thing we've talked about with gold is really it's been kind of a rodeo. It's been a shake and bake here as this thing has kind of bucked off the bulls back and forth. I've mentioned that we need to stay away until this area right here is defended. 1306 to 1310 is the zone where bulls want to keep bid for a shot at returning to highs. Right now we basically have not really tested the level proper. We've come into within 7 ticks of 1310s, getting 1310.70, so we still really haven't even tested the zone, but we've seen a little bit of bulls here come in to defend. Right now, with the rejection above the previous session high, that implies that we could be looking at a dip into that zone here pretty soon. Again, any test into 1306 to 1310 could be a great buying opportunity for a move up. Failure to hold that level, if price pushes through it and closes well below it, for example, closing below 1300, that could be a sign that price is heading back to value at 1243, followed by a move to the opposite edge of the key range at 1208.30. So right now, this is an important pivot in the charts. It had been resistance. Price went bid and held. So right now, bulls want to keep it bid for a push higher. Otherwise, this thing could be headed right back to composite value. All right, lastly, let's take a look at the NQ. Again, the NQ has been quite a bit more bullish than the ES overall after pushing through 45.50. I mentioned before that given the push through this zone, we could be looking at a continuation toward recent highs here at about 47.30. Those recent highs back in November and December of 15 were offered, and that subsequently led to a significant sell-off back toward recent lows. Since then, we've snapped all the way back up and actually pushed through these highs. So we could be looking at a little bit more strength here even out of the NQ, as it has been quite a bit more bullish. The key level and pivot to watch right now is going to be this 46.25. So bulls want to keep prices bid for a continuation higher. Failure to hold 46.25 will open up a move back to 45.50. So right now, that's the key level to watch, 46.25. On an intraday basis, looking at this on an intraday basis here, you can see prices have been chopping around over the last day or two. And really, this is not a prime opportunity to trade at all. We saw some rejection here above the previous session's high here. Previous week's high, that's 46.64.5, so that's the level to watch. Any prices above there likely to be rejected short term. So look for any rejections between 46.65 and 46.70. That could offer an opportunity to turn this thing back toward 46.40. Any push downward toward 46.25 offers an opportunity to bring it back to value at 46.50. So right now, you really have to be patient about waiting for the edges. Otherwise, this thing could be very, very choppy as we head into Wednesday's FOMC statement. All right, that's it for now. Let's see how this thing plays out the rest of the week. Good luck and trade well.